Good afternoon, everybody. My name is Joe Werther. I'm a senior lecturer here at Georgia Southwestern State University. And I want to take the time this afternoon to visually show you how to do a problem in the book. I believe this problem I may assign for homework in Wiley Plus, but I want to go through it with you just to make sure you understand how to do it. And we're going to use T accounts. And this is problem 14-4A on page 789 in your text. Now, I like to figure out the cost flow or the flow of cost in these beginning chapters of managerial accounting using T accounts. Now, let me just tell you that there are three inventory accounts in managerial accounting: raw materials, work in process, and finished goods. And that's why I've set everything up in T accounts. And the numbers that you are looking at are the beginning and ending balances that the problem gives you. And this is how you should set your problem up, just like I have. Okay? I'm going to take it step by step. Now, the first thing you got to do is determine the raw materials used on the job. So what I do is right away I look for raw material purchases, and I see that there's $96,400 of raw material purchases. So I put that in on the debit side for raw materials, and I add those two numbers together, and I come up with $144,400. And what that number is are the total raw materials available for sale, or available to use in this case. Well, if we have $39,600 of raw materials left over, then we must have used $104,800 of raw materials. Okay, so we credit the raw materials and we go right in to work in process and we debit work in process for the $104,800. Okay, that takes care of one of our costs, direct materials. Now, in the problem, they give you direct labor. And I believe that number is $139,250, if I'm not mistaken. So let's write that in. And so basically what you have is you've got your materials, your direct materials, and your direct labor. And so there's only one more cost to put into your work in process account, and that cost is called manufacturing overhead. Now, I tell all my students in the classroom that when you're trying to find overhead costs, always look for the word factory or plant when you're looking at different costs. And if you look at all the different costs in this problem, you will see such costs as indirect labor at $24,460, factory insurance at $4,600, factory machinery depreciation at $16,000, factory utilities at $27,600, plant manager salary at $58,000, factory property taxes at $9,600, and factory repairs at $1,400. Okay, so list those costs all out and add those costs up, and you should get a total manufacturing overhead cost of $141,660. $141,660. That should be your total overhead. Okay, total overhead. Now, indirect materials and indirect labor are always part of manufacturing overhead. So anytime you see those two costs, you can include those in your overhead cost. And like I said, the rest, just look for the word plant or factory. And as soon as you see that word, those costs, if they're not direct materials or direct labor, which most of the time they're not, those costs are included in the overhead cost. Okay, now just going through it again: indirect labor, factory insurance, factory machinery depreciation, factory utilities, plant manager's salary, factory property taxes, and factory repairs. If you add all those costs up, you should get $141,660. Okay, so now you're ready to solve the problem of cost of goods manufactured. You want to know what the cost of goods manufactured for the period is. And all you do is you take your beginning balance and work in process, and you add your three costs to your beginning balance. Okay, that gives you a line item called total work in process for the period. And then subtract your ending work in process. Subtract that out from this total of these four numbers, and you should get a number named $386,910. Your number should be $386,910. And that is the cost of goods manufactured for the period. Now, when you credit the $386,910, you go over here and debit finished goods for the same amount, because as we know from financial accounting, if you're going to credit something, you got to debit something. Okay, so by definition, the amount that goes from work in process to finished goods is called the cost of goods manufactured. And you will probably see that on the test. That probably will be asked on the test. Okay, so now let's do the same thing to finished goods that we did to work in process. Let's add the beginning finished goods plus the cost of goods manufactured amount. Let's add those together. Okay, and let's subtract out the 75,900 from the sum of these two. Okay, let's subtract out 75,900, and we're going to get a number $407,010. Okay, so if we're going to credit something, and we're crediting finished goods with $407,010, we have to debit cost of goods sold for the same amount. Okay? So there you pretty much have it. You figured out your cost of goods manufactured, $386,910, and you transferred that over to finished goods. And from your finished goods account, then you were able to figure out your cost of goods sold number. And most of the problems that you're going to see with this first exam are going to be concerned, or a lot of problems you're going to see are going to be concerned with cost of goods manufactured and cost of goods sold. Now, we're not done yet with this problem. They want you to put an income statement together, and then they want you to show the balance sheet, what the balance sheet would look like. Okay, now, if we remember correctly from Accounting 101, we have to come up with net sales. Okay? Okay, so they give us sales revenue. Okay, and that's $534,000. And then they give us sales discounts. Okay, and that's $4,200. Okay, so if we subtract the discounts from the sales revenue, we should get $529,800 net sales. Okay, 529,800. And once we have net sales, all we have to do is take net sales of 529,800 and subtract the cost of goods sold. Okay, so this number gets subtracted from sales, and we should get 122,790, 122,790, and that should give you what's called gross profit. Okay? So again, we got to get to net sales. Once we get to net sales, we've got our cost of goods sold number already calculated. So all we got to do is subtract cost of goods sold from net sales, and we get our gross profit number. And that's the partial income statement that the problem's asking for. Okay, and most of the time on the test, that's about as far as you're going to have to go with this test, is just down to gross profit. Now, the last thing they're asking for, they're asking for the balance sheet accounts and what the ending balances should look like. Okay, let's look for our assets. Okay, and if we look at the list of the information they give us in the problem, we have cash at 32,000. Okay, that's an asset. We have accounts receivable at 27,000. Okay, and then we have inventories. And what do we have for an inventory balance? Well, there's three balances because there's three inventory accounts. So for inventory, we have 39.6 in raw materials plus 18.6 in work in process plus 75,900 in finished goods. Okay, so if we add all those numbers up, 5 numbers, we should come out to $193,100 for total current assets. And that's basically how you solve a problem like this. It's a complete problem. I mean, they're looking for cost of goods manufactured, and they're looking for cost of goods sold, and they're looking for an income statement, and then they're looking for the balance sheet accounts, how they would be presented, how your assets would be presented on the balance sheet. And pretty much, if you know this problem, you should be able to solve any problem in the class. I suggest doing a problem like this out by hand. I like the T-account analysis because you can visually see how numbers go from one account to the other. And remember, the flow is always from raw materials to work in process. Work in process houses raw materials or direct materials, direct labor, and manufacturing overhead costs. And then from work in process, the cost that you figure out, which is the cost of goods manufactured, travels over to finished goods. And from finished goods, it travels to cost of goods sold when you sell the product. Okay? If the product does not get sold for a while, it sits in finished goods. And I always tell everybody in class that finished goods is actually the warehouse where the product sits. So if the product sits, it's in the warehouse. When it gets sold, it gets credited finished goods and comes over into cost of goods sold. And then you can do your income statement or your partial income statement and see what your gross profit is on the product. And then, like I said, the last thing you would do is your balance sheet presentation, where you would show cash, accounts receivable, and inventory in this particular problem. In most problems that you're going to see in this chapter, they would want you just to show the ending balances of raw materials, work in process, and finished goods. So that's pretty much it for chapter 14. I'll be putting together a video in chapter 14 summarizing what you need to know. But if you go through this problem manually, like I've showed you, you should be able to figure out any problem, any multiple choice question that we have in chapter 14. Thank you very much.